Let's move on to our next management, Torrent Pharma. That's a stock in focus. To discuss the past quarter's numbers as well as the way ahead, we're joined by Mr. Sudhir Menon, the Executive Director and CFO at the company. Hi, Sudhir. Good morning and good to see you, Ben. Well, let's talk about the largest part of your business. And in Q3 FY25, the domestic formulation sales grew by around 12% year on year. That even beat IPM growth, which was around 8%. And this was led by chronic therapies. Will India growth from year on as well continue to do well? And will it be led by, chronic therapies? What could the guidance be, say for Q4, for FY26 as well?
Yeah, good morning and thank you for having me. I think before I comment on India business, would quickly want to give some color on the overall performance for this quarter. So Q3 had two lowlights. One is the insulin business, which is a one-quarter temporary impact, which we had guided in Q2, has impacted the overall revenue by 2%. And the second one was the Brazilian real depreciation of 17%, which again impacted the revenue by 2%. Normalized for these temporary impacts, the revenue growth is 7% and operating EBITDA growth is 12%. And again, on YTD December, if we normalize for these two impacts, the EBITDA growth has been 15%. So the underlying growth continues to be strong for us. And while insulin impact normalizes in Q4, the BRL depreciation should start normalizing over the next 2 to 3 quarters. And therefore, from a long-term story perspective, the story is intact for us. Coming to India business, I think again the market growth of 8%, as you said, we've grown by 12% in Q3. And on YTD December basis, we've grown at around 13%. And while we continue to outperform the market in all our focus therapies, what's more positive is that in therapies where we are over-indexed versus the market, we've seen stronger performance. For example, cardiac, while the market has grown at 10%, we grew at 16%. In gastro, the market grew at 8%, we grew at 13%. And CNS, the market grew at 8%, we grew at 11%. And anti-diabetic, the market growth was 10% and we grew at 17%, so on and so forth. So essentially, we've been focused on the chronic segment, where the chronic segments contribute 75% of our total portfolio, and it's only 25% which is acute. Our strong growth, I believe, is because of the continuous reinvestments which we have been doing in our domestic business since 2021. And since then, number one, we've expanded our vehicles by almost 50%. Second is our investment in the OTC segment, which has helped us in scaling some of the larger brands where we have seen strong incremental growth coming in these brands.
Right, Mr. Menon, Mr. Menon, you're giving us a good amount of details qualitatively, but since we're a little short on time, we request for some quantitative guidance from here on as well. As you said, you've done a whole host of measures. Chronic is bulk of your business, and that's done quite well. Tell us, what's the outlook? Do you continue to outgrow the industry? What could it be in percentage terms? And what about the US business from around $32 million of revenues on a quarterly basis? Where does that head? Please go ahead, sir. Some quantitative numbers.
Yeah, I think from a next 2 to 3 year perspective, based on the reinvestments which we have done in the business, our objective would be to grow double-digit as well, the same as this year. And as far as US business is concerned, the US business will be a gradual uptake story. The first goal for us is to achieve a profitable growth than anything else, because today US is negative. And we should see 5 to 7 launches happening in FY26, and that could help us to grow the business by 10 to 15% over the current base. There could be higher opportunity in these launches if the competition landscape is looking much better, I would say.
Mr. Menon, hi, good morning. Prashant here, and good to see you on the program, sir. It's been a while. So just to get those numbers out of the way, India's business revenue growth and US revenue growth, what should it be? You said 5 to 7 launches in FY26 in the US. So just those numbers?
Correct. 5 to 7 launches in FY26 for the US business, which could help us to grow 10 to 15% over the current base, which is 120 million.
Okay, 10 to 15% in the US. Got that. I think you've answered that launches question out there. So 5 to 7. Now, insulin CMO sales were nil during the quarter. You began by saying that you would kind of sort of guided around that in the second quarter. Could you give us a sense of how that is likely to sort of come about in the over the next many quarters? What's the normal run rate of sales per quarter?
So the normal run rate is around 75 crores a quarter. And as guided in quarter 2, we have taken a temporary shutdown for upgrading certain European guidelines, I would say. And we had also guided that the manufacturing facility will be released in December, which we did. And the dispatches have started in January. So quarter 4 is normalized.
Okay.
What about margins, sir, if you can give us a sense? You've spoken about improving margins by between 50 and 100 basis points over the next 2 to 3 years. Is that on track? This is an annual improvement you're aiming at, and what will drive this?
Yeah, so I think this year we should close at 32.5% versus 31.4% last year, registering an improvement of 110 basis points. Our branded segment accounts for 76% of the overall revenue base. And we do not see a significant mix change over the next 2 to 3 years. And that is so, we believe the margin improvement story in the base business between 50 to 100 basis points should continue playing out. Additionally, there is an incremental positive which US launches might give. And all the more, we believe that the margin improvement of 50 to 100 basis points should continue next year as well.
Okay, all right. Mr. Menon, just one query. US business will grow and you're looking at profitable growth. When does it turn profitable?
So maybe it will take 3 years' time, I would say.
3 years' time. And what would the revenue number look like? As of now, you're doing a quarterly run rate of around 32 million. So at break even, what would it be? Around what, 40, $45 million on a quarterly basis? Just a rough number, sir.
So it's all dependent upon the market factors, right? I mean, there's one price erosion playing out on the base business. The second is the new launches. If there's no competition coming in, then the story is different, right? So for me to give you a number as to at what level it could be profitable is a little difficult at this point in time.
Okay, all right. Final question before we let you going then. Could you tell us, how is your balance sheet looking like? I'm looking at your interest cost. I think it's clocking around 55 crores per quarter. But I believe you have an intent of getting net cash as well. So what is the trajectory on that front, the current debt in the books, and by when do you turn debt-free?
Yeah, so I think as at 31st December, my net debt position is 1,900. And this being so, I personally believe that maybe first quarter of FY27, which should be net cash.
And current debt, you said, is 1,900 crores, right?
Net debt is 1,900 crores.
We appreciate you joining in, Mr. Menon. Wishing you all the best going ahead. You're guiding for better times for the India business. US business eventually will break even in the next few years and will grow at around 10 to around 15%. And you're going to be net cash by quarter 1, FY27.